Alright, Doston, welcome back to Crypto Brain, and tonight's discussion is not just another crypto update, because what is happening around Toshi right now feels less like a normal market movement and more like a psychological war unfolding in real time. Because imagine this for 1 second. What if one of the most powerful political figures on the planet suddenly looked directly at a rising digital asset and publicly declared just 2 words, Toshi Fail? Now, whether those exact words were officially spoken or not is still heavily debated online, but the reaction alone has already shaken the entire community, because over the last several hours, crypto forums, Telegram groups, Reddit discussions, and private X spaces have exploded with fear, confusion, and speculation, and investors everywhere are now asking the same dangerous question. Is Toshi genuinely collapsing, or is the market being manipulated into believing that it is because Doston, when politics enters crypto, the atmosphere changes instantly? This is no longer just about charts, resistance levels, or trading volume. This becomes a battle of perception, influence, and psychological control, and historically, whenever powerful public figures become connected to financial narratives, markets tend to react emotionally long before they react logically, and that exact emotional instability is what we're now witnessing around Toshi. Because the moment Donald Trump's name became associated with negative speculation surrounding the project, panic started spreading faster than facts themselves. Now let's be completely analytical here, because there is currently no verified public evidence confirming that Donald Trump officially targeted Toshi directly. However, what has intensified this entire situation is the growing narrative online that powerful political and financial circles may be quietly uncomfortable with the speed at which certain decentralized communities are growing. Wing and Toshi has rapidly become one of the most discussed names inside the base ecosystem, which naturally attracts both attention and scrutiny. And this is where things become extremely interesting from a market psychology perspective, because experienced traders understand something that retail investors often forget. Fear itself creates opportunity, because throughout crypto history, some of the largest accumulation phases have occurred during moments of maximum uncertainty, when headlines become negative, social media becomes chaotic, and acre investors begin panic selling while larger players quietly position themselves underneath the noise. Now think carefully about the timing, because according to several on-chain observers, unusual wallet activity has reportedly increased around periods of heightened fear surrounding Toshi, and that immediately raises another question. Are whales genuinely exiting the market, or are they strategically absorbing liquidity while retail investors emotionally react to negative narratives, because smart money rarely moves publicly? Smart money vacillantly during confusion, and that pattern has repeated across almost every major crypto cycle in history. And Doston, perhaps the most dangerous aspect of this entire controversy is how rapidly online narratives now shape investor behavior, because modern crypto markets are driven as much by emotional influence as they are by technology itself. One viral phrase, one leaked rumor, one politically charged headline can instantly change market sentiment globally. And once fear enters the system, logic often disappears completely, because people stop analyzing structure and start reacting emotionally. Now, according to multiple online discussions, the alleged Toshi Fail narrative reportedly emerged after rumors circulated regarding a private political and financial conversation involving digital assets and future regulation. And although none of these reports have been independently verified, the speculational one was enough to trigger intense reactions across the community, because investors immediately began imagining worst-case scenarios ranging from government hostility toward meme ecosystems all the way to coordinated market suppression theories. But there is where professional analysis becomes important, because emotional reactions rarely reveal the full picture, and many experienced traders are now pointing out that similar fear cycles appeared during Bitcoin's early years, Ethereum's expansion phase, and even during Dogecoin's most explosive periods. Because whenever a rapidly growing digital community begins attracting massive public attention, narratives become weaponized both positively and negatively. And this is precisely why many analysts believe the current Toshi situation may actually represent a classic psychological key out, because if large players wanted to accumulate significant positions at lower prices, creating uncertainty would be one of the most effective strategies imaginable, because fear weakens conviction, and weakened conviction creates selling pressure, which in turn provides liquidity for sophisticated capital to quietly build positions. At the same time, however, professional traders also understand that speculation cuts both ways, because narratives unsupported by real ecosystem growth eventually collapse under their own weight, which is why the Most important thing right now is not social media panic, actual market structure, wallet behavior, and ecosystem development, because those are the signals that matter long term. Now let's discuss another theory that has dramatically intensified this situation, the idea that Toshi may potentially connect to future AI payment infrastructure, decentralized internet system, saw broader digital ecosystem expansion, and whether realistic or not, that narrative alone has dramatically expanded investor imagination because whenever people begin linking Ngiga project to future technology revolutions, market volatility tends to increase aggressively due to rising speculative attention. And Doston, this is exactly where human psychology becomes extremely dangerous, because markets move through emotional cycles, first disbelief, then curiosity, then excitement, then greed, and finally panic and right. Now Toshi appears to be trapped directly between panic and opportunity, because one side of the market believes the project is collapsing, while another side believes the fear itself is manufactured to create discounted entry points before a larger move. Now, from a technical perspective, what traders are watching most carefully is whether support structure continues holding during periods of heavy emotional volatility, because historically projects that survive intense narrative attacks while maintaining active communities often emerge significantly stronger afterward, simply because surviving psychological pressure increases long-term conviction among holders. At the same time, if fear continues accelerating without strong ecosystem participation, then downside pressure naturally becomes more dangerous, which is why this current phase matters so much, because markets eventually reveal whether narratives are artificial or sustainable through liquidity behavior itself. And perhaps the most fascinating part of this entire situation is how deeply politics now influences digital finance, because cryptocurrency was originally designed to operate outside traditional power structures. Yet, ironically, the moment influential political figures become connected to certain narratives, TS react instantly, proving that psychology still dominates even inside supposedly decentralized systems. Now across X, Reddit, and private crypto communities, one phrase keeps appearing repeatedly: what if this intentional? Because many investors now believe that narrative warfare itself has become part of modern market structure, where public perception can be manipulated to trigger emotional reactions before larger financial movements occur, and whether true or not, the existence of that belief alone changes how investors behave. And Doston, this is why tonight's discussion is much bigger than Toshi itself, because this entire situation represents a perfect example of how modern crypto markets operate through attention, emotion, fear, influence, and strategic uncertainty, and the investors who serve these environments are usually not the ones reacting emotionally to every headline, the ones calmly analyzing structure while the majority loses composure. Now, one thing remains undeniable: despite all the controversy, despite the fear, despite the political speculation, Toshi continues dominating conversations across the crypto community, and in markets, attention itself is power, because once an asset becomes psychologically embedded inside public discussion, volatility tends to follow aggressively. In both directions. So the real question right now is not simply whether Toshi succeeds or fails. The real question is whether the current fear cycle represents genuine collapse or strategic narrative pressure before another major market phase begins, because crypto has repeatedly shown that the biggest opportunities often appear at the exact moment uncertainty feels unbearable. And that is why traders around the world are watching every wallet movement, every liquidity shift, every narrative change, and every psychological reaction extremely carefully, because somewhere beneath all this chaos, smart money is almost certainly making decisions already. This is Crypto Brain. Stay analytical, stay emotionally disciplined, and remembering crypto markets' perception moves faster than reality, but eventually reality always reveals itself.